dive right into should you invest in gold for the long term, because it has done very well this year. I think it's up 20% year to date in a difficult market. I mean, the markets are down, stock markets are down, but gold again up around 20%. Now, when you look at the long term results, and this is why we always talk about long term investing, they're not that exciting. And there are periods of time when gold has been a strong performer. But the thing is, when do these periods come up? When do you invest? When do you sell? It is like you need a crystal ball. We have one in our office, but you need a crystal ball that really works, because it's crazy.
Yeah, and I'm just kind of looking here. Year to date, it says on CNBC, it's about 23.8%. And I mean, you see the commercials. Had you invested in gold on this date and sold this date, you would have made a ton of money. And it's like, I mean,
pick the dates.
You could say, hey, had you invested in stocks on, I don't know what the exact, what was it, March 2009 or whatever? It's like, wow, you would have made so much money. I mean, you can kind of pick and choose. But the thing that we look at with gold for the long term, I mean, you go back to January 1980, and this is going back, you might be saying, well, this number doesn't sound that great, but gold reached $850 per ounce. And you're like, well, compared to, I'm kind of looking at the closing price here, $3,300 on Friday. I mean, you know, that's pretty good, right?
Sounds great. Yeah.
Well, if you actually adjust for inflation, it's called a real kind of number there.
Real return, I think.
A real return, exactly. If you adjust for inflation, back in January 1980, the price of gold was $3,486 per ounce.
Well, that's the same price it is now.
Actually, lower. So, I mean,
well, you said 3,500.
Well, so no, right
What's the
now,
number again?
the number from 1980, the real number, again, the inflation-adjusted number.
Well, you say that's what it'd be in today's dollars back then.
Exactly.
Right.
$3,486. Friday's close, $3,330. So we're actually back below that number, but we actually did surpass that. We did see gold hit $3,500 per ounce, which was an all-time high on an inflation-adjusted basis. But this means essentially you made no money in terms of a real basis, an inflation-adjusted return basis for over 45 years. So again, congratulations if you've held it the last year, but gosh, if you've held gold for the long term, I don't think you've done that well.
And you know what's funny, Chase, is that you talked about the real return, the inflation-adjusted return. Why do people buy gold? Oh, it's a great inflation hedge. Well, wait a minute. You've lost money with this inflation hedge.
I mean, it actually, maybe not. I mean, it's exactly an inflation hedge because you broke even with inflation.
Well,
so, I mean, but that means if you look at when gold hadn't gone up, 20%, let's say over the year-to-date basis, or I mean, over the last year, it's done phenomenal as well. I mean, that then means that you were not even keeping pace with inflation had you bought it January 1980. And again, this is kind of picking a data point, but you go back 45 years, there is no point in history, I don't think, where you could look at stocks on a particular basis like that and be like, oh, actually your return wasn't that good.
Right.
Even if you bought stocks in, 2007 before the big pullback, your returns were still better than what it has been in gold.
Yeah.
I mean, it's just something that it just doesn't make any sense to me.
I think gold is something that people just like the feel of. It's such an emotional buy. And again, in our firm, Wilson Asset Management, we say no emotions, just results. But gold is bought on emotions. It's bought on fear. It's bought on inflation, which we just proved doesn't really work very well. And you've got to time it. And there's no way to know. It's only based on what the next person will pay for it. And yeah, it's up now because of fear, but that could disappear very quickly. And all of a sudden, here you are again with no gains on gold. And this is why investors are such poor investors, is they chase returns. I think you said gold's up, 20% year to date? Wow, I better get some gold because it's going to keep going higher. That is not how you invest. You invest based on value. And with gold, I mean, what is the value? There's no earnings, there's no rent, there's nothing to it.
Yeah, I mean, there's nothing. So, I mean, it's a big concern. And then also, you're looking at just the price of it right now is what we're looking at. It doesn't even add the fact that there's additional expenses for trading and holding gold. Much more expensive than if you buy and hold good quality stocks or companies. Gold, far more expensive. So, it doesn't make sense. I think it's a silly kind of tool that people sell as an asset allocation model. And I'd rather just buy good quality businesses for the long term. Gold, to me, it's too hard to value. I mean, It's like, oh, well, the central banks could be buying gold, so that's why you should buy
Right.
gold now. And it's like, that's a guessing game.
Yeah.
I mean, even if, let's say, you're right and the central banks will start buying gold, what is the target sell price based off of that? You can't actually derive a fundamental value of what gold is worth. And that's why it's, I'm going to say, impossible to hold.
And you brought up a good point, too, about these selling commissions, because people don't think about that. And I know, and I've been wrong. I said at the beginning of the year, gold is pretty pricey. I wouldn't be buying it. Had you listened to me, you would have lost maybe about a 20% gain. But not really, because the commissions, I remember looking at that, they can be, I believe the numbers, anywhere from 4 to 10%. So if you're at 3,500, make it easy, and that's for 1 ounce, you're going to pay $350. Now, maybe they adjust it somehow, but the commissions going in are expensive, coming out. That's why maybe the ETF makes sense. I mean, there's just so many things. That's why we stay away from it. We did it one time. We didn't make a decent return on it, but we did it for inflation hedge during 2022, and it didn't keep pace with inflation at all.
And you and I've kind of gone back. I don't know if I'd ever do it again. I view gold as now almost a trading tool.
Yeah.
It's almost like an inverse correlation fund. And you might be saying, well, how does that relate? It's a trading tool.
Right.
And that's all it is in my viewpoint, because there's no fundamental value to it. So I think that's why I would stay away from gold. It's a guess at where it's going to go next.
Yeah, so that means we're saying do not buy it. If you hold gold, we're going to sell it. Doesn't mean it won't go to 3,500, 4,000. Who knows what craziness can happen. But again, keep in mind, since the last high of $850, inflation adjusted, you've actually lost money. That's the important part. So